welcome to the Habitat team. Appreciate you guys joining up.
Hey guys, what's up? Can you hear me?
Sounding good.
Awesome. Me and Mickey are here in Taiwan.
Hey, what's up?
We're at an energy conference, so it's late at night here, but happy to be on the show.
Literally
let's go.
live from the streets of Taiwan. One of the biggest energy conferences in the world, definitely the biggest in Asia. So it's kind of wild how far things has come to us,
What kind of happens at an energy conference? You just have a bunch of speakers go up, networking.
It's kind of like a trade show where they've got a bunch of different EPCs, engineering procurement companies that, or battery manufacturers, solar panel manufacturers, people that basically build everything energy. And, Taiwan is one of the biggest innovators in the world. They make everything crazy fast technology wise. And we wanted to try and start getting access to the APAC market through the people that work through this area. And we can kind of get into that a little bit more with some more questions, but it's basically just one of the kind of regions that's really advanced in terms of how much money is going into solar and how much money is going into that kind of renewable markets, but not just for the sake of, ESG or anything like that. It's actually for industrial purpose. So
this is really interesting. Yeah. So I'm checking out your website.
Yep.
We're going to get into all that. Can we get a little background from you guys? What got you into this renewable energy sector? What made you interested? Who are you guys? Experience, etc.
Yeah, well, we can start from the ground up. Basically, Habitat was born from one simple realization that we waste an insane amount of clear energy. Every year is more than 100 terawatt hours of renewable power just disappears, and we produce it, but the grid cannot take it. So it's basically too much generation and not enough transmission. It's too slow to adapt. And meanwhile, AI, crypto, cloud, they're all starving for power. So basically, you can think of energy and GPUs. They're like the new oil rigs, but everyone's fighting for the same megawatts. So for us, the core question became, what if we could take that wasted energy and instantly turn it into productive compute, So basically, that's the spark that created Habitat. So we'll build modular GPU data centers that sit right next to solar parks. So instead of sending excess power into the grid to be wasted, we convert it directly into compute for AI, rendering, training, or blockchain infra. So you can think of it like sunlight becomes compute becomes capital, and capital becomes liquid. Because each of our modules will be basically a 40-foot container, fully loaded with GPU racks, cooling, UPS networking. It's plug-and-play systems, EPC ready. So as my colleague told you today at the energy conference, we were sitting with EPCs that build gigawatts of power per year, signing partnerships, onboarding companies that power whole cities, So is actually the part I'm most proud of. We're not talking about theory anymore. We've already partnered with Trakia Solar, which is 45 megawatt PV park. It's our first confirmed site, and we signed 2 memorandums of understanding with EPC companies representing over 100 megawatts per year of build capacity. So we've got 2 letters of intent from compute clients ready to start using Habitat capacity once the first containers goes live. So yeah, we've been moving pretty fast from concept to reality in just months. And the Web3 component, it's what connects everything. So we picked Solana for the reason that it's a chain that runs fast enough and cheap enough to coordinate infra at scale. And of course, it's also about culture, because the whole ecosystem has been very builder driven. Like they kind of been obsessed with real products rather than vapor, with the whole internet capital markets movement that's been emerging around Solana. So that's exactly where Habitat belongs. And we literally submitted for the hackathon, Coliseum hackathon, which we plan to be the on-chain coordination layer, like turning energy and compute into liquid programmable assets.
Yeah, I have a question around the compute itself. Right now, we're seeing data center buildouts. 5 gigawatt up to 5 gigawatts.
Right.
Meta wants to do. Galaxy Helios is idea of 3.5 gigawatts. These are really large compute infrastructure where all the graphics cards are co-located in a single kind of geographic location, which kind of seems to be a model that works for these large training runs. How do you guys think about how your data centers work if they're geographically distributed? Like, is there some sort of cloud that brings that compute together and then makes it kind of usable on these large training runs?
Yeah, so certain job types do require isolation across a large workload center like that. That's where there is kind of a give and take when it comes to decentralized compute like this, where you've got let's just say you've got like our main Node 0 facility is 45 megawatt. We might put 5 to 10 megawatts of compute capacity there with battery storage, so it can run 24/7, using up the entire excess supply of that energy. Yeah, it's not going to be able to compete with a hyperscaler. However, when you look at it at scale across gigawatts of unused power, for example, in the EU, where many of the partner clients are, we're looking at about 1.5 to 2 gigawatts of partner parks that have basically suffering about a 30% annual loss in revenue because they just don't have a customer for it. So if we can offload that compute, even if it's not maybe the most competitive for the biggest models out there, it's still going to be a revenue improvement for these big infrastructure with high capex and government funding that help bring money to the table in a way that, for example, if you want to look at Meta and Facebook and all those guys over in the US, they're using public debt and selling equity effectively with partnership deals to build out these billion-dollar facilities. Maybe the rest of the world might be a little behind on that, and that's where a modular concept can really kind of catch up to some degree that level of kind of compute density, and then offer a different solution where capable for the different models that are out there that aren't necessarily requiring a extreme latency or having that kind of all-in-one metal frame environment like that. So hope that makes sense.
Yeah, it does make sense. BlackRock actually just bought, I think, Applied Digital or some sort of data center company that had distributed data centers. And I believe they valued that business at $8 million per megawatt. I would have to go back and look at it. Galaxy has signed deals with CoreWeave at about a $3 to something million per megawatt deal. How do you guys see the valuation per megawatt on the compute that you're providing?
That's something that we're kind of still dialing in, like what the actual full value kind of revenue turn would be from this first Node 0 site, like where we're actually going to place the first modular container down, find our first kind of more decentralized customers that, for example, one of the people we've been talking to, they actually do need consumer graphics card usage, like because the models that they're running are not necessarily as they're not needing an H200, for example. They're using a NVIDIA GTX 3090 to run their little simple model like that. So we're trying to see what type of revenue is out there from the kind of crypto market, while also finding access to some of these bigger networks like Render and other kind of aggregate networks where we can offload that compute into a kind of a fabric network that provides a revenue stream for kind of proof of concept, I guess you could say. Some of the numbers we've looked at and we found, Mickey, is something along the lines of anywhere between, more on the sake of the solar park, they're getting about a 13-year ROI on their investment from just the hardware on the ground as it is, with just putting in one container for like in a ratio, turning it into a 3-year ROI.
Yeah,
because
the break-even impact on this is crazy. That's why we've been getting a lot of interest by EPCs and solar parks. So literally 5-10 solar parks calling us a day, because the word's been spreading in that sector. For example, in our own solar park, which is Tracker Solar, the curtailment report said that we had 26% curtailment for the past year. And the solar park cost about $35 million to build, with additional $20 million for batteries that we just ordered, $10 million from which was funded by the EU. And the break even is going to come in about 13 years. So if we just use 1 megawatt of the 45 megawatts and place about 1,440 NVIDIA H100s, we'll bring down the break even from 13 years to less than 3 years. And that's even if we use the GPUs just for 15% utilization, So
you're seeing demand
that's
from the
underestimation.
utility side that are wanting to implement this to speed up.
There's been a ton of funding and money coming in for EU, especially, and other, maybe not so much in the US. Yeah, there's been a little bit. There's a pretty good amount of solar compared to wind, because Trump hates wind apparently. But anyways, there's a lot of extra energy that doesn't have an energy sink in the European Union.
Yeah.
And that's where the really easy, just money floating around in thin air to grab is. And that's why we started the project, was because we see this, multi-billion-dollar infrastructure hardware on the ground now, not producing money, that they can't sell it to anybody because there's not a place to sell it to. There's no data centers, there's no manufacturing, or there's no even Bitcoin mining really at scale like that. So Bitcoin mining isn't a bad business now. We could just put Bitcoin mining down on the floor, but that's not really what the big opportunity for an ROI is today. Today is actual compute service and offering a decentralized provider of internet concepts. Basically, it's more than just GPU. We can also do server hosting. We could even have our containers can be configured to have a whole validator node set up, for example. And that's one of the plans we have, is to host a validator for Solana, for example, at one of these locations that's going to have good latency connectivity to a fiber plug backhaul right next to the plant. So
yeah,
that's
and
kind of like what we're talking about here.
One way I want our audience to think about this, everyone thinks about the hyperscaler constraint being on the NVIDIA graphic card side, but in reality, it's actually the power contracts with the utilities that are the main constraint, because you're drawing
power is the main bottleneck.
Yeah, you're drawing gigawatts, which is 1 gigawatt is like a nuclear power plant, or a 1 reactor or 2 reactors of a nuclear power plant, like significant size. So what you guys are doing is getting all these contracts with this unused utility energy, and then saying, hey, we think there's enough compute, we can kind of co-locate. Okay. So I think that's like it for my questions. Dom, I don't know if you want to chime in here.
Sure. Yeah. I got a bunch. Okay. There was a lot that just got listed out there. Let's start with the ROI. You said our ROI really comes down to 3 years if you can secure a few things. It seems we talked a while ago to another project, and they were saying, you're seeing all these outside investments from NVIDIA, and people are just basically flooding in to build these data centers, but it's super inaccessible to the average person because it costs billions of dollars or a ton of money. Maybe tell us why there's so much investment going here, and how you were able to get that ROI down to a 3-year time span on such a big size.
The capex is definitely quite big, but the main operational expense for running a data center is energy. And because we use mostly curtailed energy for us, we get pretty good deals on PPA. So the power is very cheap. That's why we are capable of cutting the actual cost of compute. And even if we sell half the price compared to the big providers such as AWS, we still can make pretty strong margins. And my colleague told you that our main selling point is actually curtailment, but today, like here in Taiwan, no solar park faces this issue because they're basically subsidized by the government. But still, today we found out that their break even still is not that far away from a park that actually faces a lot of curtailment. So even if the government buys all of your power, you still break even in about 11 years. So we've got pretty good business case for it doesn't matter if the parks got curtailment or not, and in terms of GPUs, there's no chance we face a bottleneck because we open a pretty strong business vertical for GPU suppliers and modular data center suppliers. Because right now we were invited. We had a private tour in the main factory of H3C, which are one of the biggest producers of modular data centers in the world. So actually, we're gonna be posting about this and post photos from the private tour over the next days. But solar energy to them is an untapped market, so they never thought about that, and we're creating for them a new business vertical so they can basically help us scale up to 10 terawatts of power just in the EU, which this will basically require billions of investment. But we're moving quite fast, and our services we're facing a lot of demand from solar parks. So things are looking really well.
A good way to think about it. Go ahead. Sorry.
Well, no, finish that thought.
Yeah, I was gonna say to kind of think about it like traditionally with these types of investments, the capex is like an A plus B thing. You get your panels on the ground. The size is based on how big you want to use the land for it, right? Like that's a big issue for some places is land. It's a big surface area. So the land cost is a big aspect of it. And then on top of that, the infrastructure to connect it to the grid, the transformers, all of that type of stuff is another part of the equation. And then the secondary part of that, the financial investment for these companies is putting an energy storage system into place. So that's where a lot of the innovation is. You'll see these kind of headlines about how the quiet stocks to buy is like Bloom Energy and stuff like that. That's because there's a ton of reason why solar is very efficient. It's just that it only works half the time or less, right? And that's just a factor of it uses the sun, right? Like it's not a base load power system. So adding storage systems to the equation helps make them have a better revenue stream, supporting base load infrastructure like nuclear, gas, no coal over here, obviously, but in the US,
if you want to sell solar and you have 45 megawatts of park, you want to sell all this power.
Yeah,
you need 45 megawatt worth of batteries.
Right. And capture it all, so it stores it through the
for
EV.
modular data center, you just need 1 megawatt of batteries in order to offset the curtailment in full.
I have a little math kind of a thing to help you kind of visualize it. Let's imagine a gigawatt, right? We talked about that number earlier. The park that we have, imagine it was 1 gigawatt facility. So if it's a 30% curtailment, that means that 300 megawatts per year are wasted. What would you do with that if it's free energy to use in a competitive market where AI is demanding, PPAs in the 5 cents per kilowatt hour, or roughly in the US or higher in other places, and they're making everybody else's bill at your house get more expensive because they have these purchase contracts like that. So if it's free, we have no cost for part of the year where we can basically compete, and then the bottom line is a much higher margins off of that.
And for reference, for a 1 gigawatt facility, which is basically a whole nuclear reactor, you just need about 20 megawatt batteries and MDCs to offset curtailment and drastically increase the revenue stream.
Yeah. Go ahead, Dom. What was you had some questions, I know.
Yeah, sweet. So there's just a lot. I'm trying to piece it all together here. Could you maybe just simply put lay out the different verticals of this business? Obviously, you have the power grid here. You said you have another like GPU network and GPU data centers,
Sure.
very closely located to the power grid here. Could you just maybe explain in simple terms the different verticals you guys have? Because it looks like there's more than just one.
Yeah, so I like to think of this like kind of like I was mentioning before, this A plus B, and now we have a plus C option for these engineering companies to add to the solution. So traditionally, they're putting in the big park, they're putting in the battery system, they're connecting it to the grid, and that's it. We are now offering a solution to engineering companies to add when they're doing their site planning, when they're doing their permitting, when they're doing all of that preparation work, a concept that can grow modularly and expand up to the demand of their grid where it fits exactly in their curtailment window. So it's a plus C. So A plus B and now a plus C option, so that their CapEx expenditure, these $50 million investments, have a revenue improvement. Yeah, there is a CapEx on the hardware, meaning the GPUs, that there's an expense there. So it does add to the overall total line item, but it does make more money. So, obviously the risks and stuff in that is what's going on with AI.
Not necessarily adds, more, because they can basically cut costs on batteries,
Yeah.
It makes more sense for them to actually use our models, integrate our models, and put more data centers in.
It's a cash flow change, basically,
So
if you want to think about it.
who's paying for the graphics cards, the H100s? Is that
would be
you guys or the utility?
That would be the utility company or the company that owns the solar park that's going to be installing them. We are putting our own in at this first location. So it's our test location with the first container that's going in. So we are buying it and putting it in ourselves as a model and a case to show off to other companies, and then using that as the kind of proof of concept to go to market with, to take towards these other locations and show them how quickly we can scale that.
Currently, we're in a pre-deployment stage where we put our own money in collaboration with an EPC company that is going to offer a Habitat native solar packs as a part of their service portfolio. However, in future, we'll have different models to do this. Like we'll build our own data centers. We'll also offer as a service, a relocation service, where we'll relocate other Web2 companies or DeepIn or Web3 AI companies and give them better power purchasing agreements. And also a third thing is, and we've been thinking about this for a while, trying to connect with as many DeepIn projects as possible, where we can actually get together and architect and build from the ground up Web3 native data centers that won't be repurposed from Web2, but will be built specifically, for the needs of Web3 companies.
So co-location, if you want to think about that, second option would be is other companies could put their GPUs into our hardware much faster than we could maybe buy it on the CapEx side for the customer. So that is an angle as well.
So why would it be valuable to have a Web3 specific facility rather than just open to everyone?
So, if you want to think about this in terms of, how has the Web2 AWS system, if you remember last week how everything crashed in the East Coast because of that, Solana survived pretty well from that, but other blockchains didn't, like other services didn't, MetaMask and some other things like Coinbase went down, right? Like they had issues with that. So imagine a decentralized service network as a kind of maybe a backbone or a layer that's there supporting, grid outages or, let's say there's a solar flare or some shit like that. So the more decentralized you make the server network, the better. Having a customized system that's built to spec for what the Web3 community needs makes sense, right? Because, what is the, what if you could, let's talk about Helios, for example, like, the RPC provider on Sol. Is there a specific configuration that they like to have for their nodes? Yes, they do. But what if there was a way they could get a better arrangement in terms of the hardware through someone who is willing to customize it so it's specifically use case for crypto? That's the kind of difference. Whereas the Web2 AWS models, you can configure them, then they have the different arrangements. It's just it's capable of doing this. But what happens if you have an environment where sorry, the car's loud. If you're building it for the environment, kind of built by enthusiasts for the enthusiasts of this space for like a better future in crypto. That's the concept. So I hope that makes sense to you.
And also one GPU can be actually segmented and used by up to 8 projects at a time.
Yeah.
So it's optimization. When you're just a client of AWS, you don't know this.
Yeah.
You have no control over this. But we're sort of going to optimize this for Web3 users and give them best value for money.
Yeah. Customer fit.
Okay, we're going to get to Web3 a little more in a second here with your token and everything. You mentioned 2 LOIs you guys have kind of pending here. Can you tell us about those LOIs or what that's going to achieve for you?
Okay, so in order to close the full cycle, because as I said, we've been getting a lot of demand from solar parks. And also we've been getting quite a lot of interest by data center providers. In order to provide a good service for EPC clients, we need to sort out the end client side. So for us, the selling point for this would be onboarding Web3 companies. So these two AOIs are basically for Web3 companies who would like to reserve future compute capacity in order to, they actually need compute. So right now we're exploring different angles of collaboration. One of them is a robotics company. So robotics, they need to run a lot of simulations, so they need a lot of compute. And the other one is a deep-in project. So the more AOIs we're able to get a sort of a validation on the client side, the more MOUs we'll be able to sign with our EPCs in the sort of a proof of concept. So we'll be able to cover the client side. But the actual price that we're going to offer our compute, I say, because it's pretty big underestimation. What I said, that 1 megawatt is going to bring about 10 million additional revenue. This is if we sell compute for about $2 per GPU per hour, which we can sell quite easily.
On page 200.
Yeah.
Okay.
I think one of the LOIs is public.
Yeah.
One of them is, the other
I can
one's
actually check our
Yeah.
latest Twitter post. One of the LOIs is
Yeah, and then
the other one we're going to announce next week.
Yeah.
Let's see. Got your Twitter up here. Yeah, here we go. Letter of intent signed here. There you go. From dpin.org or dpin_org. Oh wow, big company. Decentralized settlement and coordination protocol for AI compute. Earn dpin pre-mining airdrop points. Okay, cool. Yeah, so there's one of the LOIs. The other one has yet to be announced then.
Yep, it should be next week is what we're trying to get done.
Okay, sweet. Let's gear this towards Web3 a little bit then.
Sure.
You guys have mentioned some really good ROI on this stuff. You guys mentioned 3 years. You mentioned, even without certain aspects, a little longer. But how does this flow back to holders? How can people benefit?
Token,
You guys
yeah.
have a token. Maybe talk to us about
Obviously. Yeah, obviously it makes sense. Why Web3? Why coordinate it all through a crypto token? So the model is that you'll be able to stake the Habitat token and use those to create service vouchers. The providers of that compute will basically issue an agreement to fulfill a certain amount of service. There's variations in this, like I was mentioning. It could be compute in terms of GPU time. It could be storage. It could be bandwidth, for example. There's lots of different things that they could tokenize and wrap into a service contract, and then the Habitat token will act as the yield layer, if you want to think about it like that, so that there is a natural amount of supply gravity, is what I like to call it, flowing into the industrial side of the business, where we've got people that are doing the industrial compute layer. Maybe not our the guys down here in Degenville. They're not necessarily interested in doing compute stuff, but there's going to be always a constant demand for the token to flow in and be used as the transaction fulfillment layer in that marketplace. The fees earned off of all of those transactions will be used, and then going into a kind of DeFi mechanisms, either in a liquidity provision system or kind of a buyback type of solution, or we've even considered things like burning those, for example, too. Those are still kind of options we have on the table. Let Mickey talk.
Our head of solutions explains it in such a level that sometimes even I don't understand it. But it's basically that's the question everyone asks. How does all of this tie back to the token? And the short version is that the token is the coordination layer for everything that we just talked about. So right now, today we're submitting our multi-staking protocol for the Sol Hackathon. So it's going to be live pretty soon, along with our marketplace. And the idea is simple. So you basically stake the Habitat token, start earning energy points. Then you'll be able to use these points to mint compute credits, which is basically usable GPU output that AI clients or research labs can buy, rent, or stake into. So you can think of it this way. Energy gets turned into compute. Compute gets tokenized into capital. And capital flows back into building more infrastructure. So every token represents access to real compute capacity that is powered by renewable energy. So it's the coordination layer between energy, infrastructure, and capital. So it's our market engine.
So if I'm understanding this correctly, you have the Habitat token, staking this Habitat token, then in turn gives you a piece of the energy that comes out, and it gets turned into these compute credits. These compute credits can then be used by any company that needs compute to buy compute from Habitat. And basically, they're buying it directly from the people that are staking Habitat tokens to earn this compute credit, correct?
That's correct. So part of our compute will be direct sales to commercial clients. Part of it will be tokenized, and the allocation between the two will be dynamic depending on the actual demand. So it's not very realistic to think that token stakers will, need compute. That's why they can redeem their compute credits at any time. That's why we're building marketplace for them where they can sell it to our commercial clients.
And you said it's dynamic, so can you explain how the demand side is a little dynamic? So you have clients coming to buy from you, and then they could also buy from the community that gets these staked energy credits. Can you kind of make that make sense for me? To how are they buying from one as a whole?
We've actually posted a pretty good visual example with our flywheels, our RWA flywheel, our Web3 flywheel, and how they overlap into our marketplace. So that might be pretty useful to show right now, so people get a mind map of how exactly it is working. Yeah, that's the thing. So if we have a lot of demand, it will be recalculated on a monthly basis. Let's say this month, if we have a lot of demand for actual compute, we'll be allocating less rewards for stakers, but more demand would mean that their compute credits will be more valuable, and it will also mean that we'll have more money in the treasury to keep scaling into infra. If we have less demand for the month for actual compute, we'll be allocating more for stakers, and then that's another positive effect, because basically a lot of companies that are on the edge of either using our service or not will be able to get it at a pretty discounted rate, try it out, and then if they're happy with it, they can onboard to the standard pricing over the next months.
Okay, so lots of demand means stakers get paid, and then a lot of that excess capital goes towards just growing out, infrastructure and building out infrastructure. And then if there's less demand, most of that goes back to stakers, is what I'm hearing.
It's basically the output. Basically, the value of the output is dynamic based on what's going on. So, like there's less that they receive where there's high demand, it's worth more, and then while it's on low demand, they're getting more. That could be. It's kind of a futures market if you want to think about it like that. You get more tokens, the demand pops off, and you have more that you can sell into that demand, for example. So it's it incentivizes long-term staking, for example, because you're riding through both positive periods of excess and drought, but then also you're kind of exposing yourself to the long-term demand cycle, so to speak, if that makes sense.
Okay. It's been architected in a way that it makes sense for stakers either way. It doesn't matter for them if we have high demand or low demand. They get pretty much the same reward.
And that's another kind of point I wanted to kind of roll back onto, was I mentioned, if this kind of thing I like to point out is like our token has a really high liquidity ratio compared to other tokens on Sol. We decided to do this on purpose because we wanted to make it a very tradable token. And part of that means that during this kind of supply demand fluctuation, that there's going to be a good amount of opportunity for people to either, if they are invested in stake, they can leave their position and do that without really necessarily moving the chart around a lot. That has a kind of a long-term growth aspect where we're trying to inject capital into the ecosystem and kind of overall float it up through the infrastructure growth that we expand into. So
sweet. We got to close off here in the next 5.
Sure.
So with that being said, first and foremost, one question I have is there a way we can see the prices of these tokenized energy credits trading around? Is there a market we can see just to
Not yet. Yeah.
It will only make sense for us to open up the marketplace after we deploy our proof of concept facility.
Okay. Proof of
We're
concept
looking to do
facility.
But the good news is that usually if you try to actually place an order for MDC, you won't be able to. And even if you do, it will most likely be manufactured and delivered in at least 6 months. But in our case, because we open a pretty good business vertical for data center suppliers, we can actually get it done in under 2 months. Because in our partnership agreement with data center suppliers, we're not just focusing on this proof of concept. That's why we've been taking time to find the right suppliers and onboard them as partners, because we need to make sure that beyond this proof of concept, we'll be able to scale up quickly and deliver quickly. That's why we'll be able to deliver quite quickly the proof of concept and every modular data center that'll be deployed after that.
Yeah, that scale up. This is a lot of high capex stuff.
Yep.
Do you have funding from outside the Web3 space that is backing your work?
So we have funding for the proof of concept, and then we'll start offering Habitat native solar packs as a service. And already we've been getting, because like after signing the MOUs with the EPCs, we've been basically flooded with demand by solar packs. For example, there's one pretty huge build out. It's about 1 gigawatt right now in Eastern Europe. They want to integrate Habitat models right now, because they just started build out of their solar systems. So I'm not at all worried about funding. What has been worrying me is if we supply chain, and if there's going to be any bottleneck with either supply chain or workforce or anything like on the supply side. But like we've been touring around Asia for the past 40 days, meeting a lot of producers, and I'm pretty confident that we won't have any friction down the line.
Just as a
Sweet.
kind of a note to kind of cap that little part off, like the Trachea Park, that's our first node. It's a $50 million investment, and it's dedicated to the project. It's not like we're some just vagrants using their facility or something. It's part of our team. So that network and the people that built that and installed that are part of the project because they want to get 30% more revenue out of their park or more, right? Like they're seeing the revenue opportunity. We've been working on this for 2.5 years. Like it's not like we thought of this last month. Like this has been something we've been working on for a really long time, and it's been in the works for,
Talk has been live for like
3 months.
Yeah, but actually we took our time to lay the groundwork, and
right. Securing that
more than 2 years.
Yeah, securing that first park, the one you're seeing on the backdrop there. That's it. There's a video that our head of infrastructure is touring it. You can take a look at that if y'all want to, so you can kind of see what the facility looks like. You can show it off. There's also some great articles that he has written about how this revenue model works. They're all reposted from our main account. I'd recommend if y'all want to kind of go deep into the revenue on your own, I'd take a look at that. But yeah, if you have any other questions, let us know. Thanks for the time.
Dude, that's awesome. This is super unique, massive project. It looks like there's a lot of moving pieces here. Just this facility is insane. We appreciate you guys.
Video on your website. Sorry, Don. This is a cool video on your website. I can't believe that it's real. People think that's probably like just stock.
They think it's AI. They thought it was.
Most
Yeah.
people are but
Yeah. So that's why we did. The first thing we did was have our guy go walk the site, and show it off there in person
On your
because people were like, "There's no way."
You should have a tag that says this is a real partnership, not stock video.
Well, it's circular. If you go to the Trachea website, you can see where there's that's a government funded. There's part of that park was funded by the the EU, and you can trace the money. Like it's there. Like it's not fake. You can do the due diligence if you really need to.
You can also check the official website of our EPC partner. So they listed us on their landing page as partners.
Yeah.
How much does a facility like this cost?
About 50 million.
That's like the solar panels cost about 35 million, and we just placed an order for batteries for additional 20 million. Half of it was funded by the EU.
Yeah,
that's insane. We'll have to have you guys back on at some point here in the future. This is a lot of information. I think we crammed a good bit in here. There's probably some questions that are left unanswered, but for those that are curious,
Sure.
go check out their project. Maybe plug your Twitter where everyone can kind of keep up with you guys and follow up for the best information.
Yeah.
Sounds good, man. Thanks for your time.
Appreciate it.
guys.
You guys, where can everyone find you guys? Find more information.
The
Best place.
Habitat Protocol X account is, at Habitat Protocol.
Habitat Protocol is the X account.
Yeah.
We've been documenting every step of the way. So for someone who wants to do a proper DD, everything is there. Everything is there.
Cool.
Appreciate
Thanks,
it, guys.
Awesome.
Appreciate
Enjoy
it.
your trip.
Bye, guys.